Hi everyone. So another 2 weeks have passed. A lot of happening in the markets. Rally in U.S. equities is getting some resistance, and the market is not continuing higher, and momentum is weakening. So I'm sure we have a lot to talk about today. It's two of us. So hi, Raphael. Yeah, I'm sure a lot of is going on, and what you see in the markets, and what you think about the overall direction and moves in the market for the next 2 weeks.
Hey Vi, so yeah, sorry, Ted is not there. He's gonna be absent for probably around a month. He's traveling around. So we were talking about that before the show, and I like the way you put it. The market went where it was supposed to go. So now the question is, what's it gonna do? So my current situation is that I'm out of ES. I'm going to explain why. I still have a small position long Tesla, but if things start to break down, I'm gonna be out, and that's another topic. But maybe looking to buy the dip, but that's another thing to see when we get there. I'm still holding Bitcoin. I was hoping for a break of 112 and change. Today we went to 112 and then it reversed. So maybe it's gonna be tomorrow. Let's see. So let's do some screen share and let's see. Okay, here. Okay, good. So when I say ES went where it was supposed to go, it's very simple. It went to the yearly open. And you can see here, so the yearly open is marked here. Went to yearly open, started to dance around with it, couldn't confirm, and then market started to break down. I also had a mega sell on the 20th of May. Ragav actually mentioned that. Good catch. And currently we have Matrix actually pointing down, starting its cycle down on the daily. We still don't have the cross of trade and trend, and you know I like when trade and trend they cross and trade is below trend because it's indicative of basically a raging bull market. So for now, what I'd like to see is first, I'd like to see a retest of the low of the range. I think it's something that needs to happen. We had a very nice run to define targets. Now we need to have some kind of relief. So first, I'd like to see a retest of the low of the range. That would be the first thing I want to see. The second thing I want to see is the long-term downside range is for many tickers, be it ES, NQ, the Max 7, etc. You can actually see it on MFR on the long-term upside downside ratios here. The long-term downside range is quite far away. So I'd like to see this thing actually catch up. So my base case currently is I'm expecting some kind of, let's call it chop, sideway action, maybe slight bearish action for the next 2 weeks, maybe 3 weeks. That would be my base case to allow retest of range, long-term downside range to actually catch up with price. And in the meantime, what I'd like to see is ES especially not start to break very important levels. So Vi will talk about that when he's gonna talk, I guess. And that would signal for me a potential dip coming. So I'm gonna be patient. I'm gonna watch for the next 2 to 3 weeks, see if we get an opportunity. I don't think I'm gonna buy next week. There may be some change, but this week I was patient. Next week, considering what I'm seeing, I'm thinking I'm going to be the same. So potentially watching for the week after next week to start looking to make some purchase. Now let's go to the DAX. So the DAX is also signaling the fact that we had some very nice bull run. And what I'm seeing right now is something that actually happened on the period from December 23 to January 24. I'm gonna show you quickly so you can have a look. Let's see. December, oh, sorry, 23. Let's have a look. So that's basically what we got at the time. Big buy signal, crazy bounce, and what you get is for a month some kind of consolidation, and you get a long-term downside range actually catching up. You get regular retest of the low of the range, but no breakdown. So in my opinion, DAX is probably gonna have to live the same thing as the US equity markets. So if you are playing Europe, if you are looking to buy the DAX, I would expect I would recommend to be patient first, and I would expect the same kind of behavior. So potentially several retests of the low of the range, the long-term downside range to actually catch up. So you'll get some kind of opportunity, I would guess, here at the beginning of June, probably first or second week of June. So that would again be my base case. Now let's go to dollar. So I tried this week several times to express my view that the dollar has bottom. So I'm talking about DXY and talking about the fact that I'm trying to short your USD to express the fact that I think that it has bottom and got stopped out several times. So I think I tried 3 times. Anytime I tried, I was stopped out. I'm using some particular levels provided by Vai, and Euro USD is actually reacting quite nicely to them. Just I was not on the right side for the 3 trials. I saw yesterday there was another opportunity. I decided not to take it. Maybe I should have. So anyway, I'm waiting. Maybe there will be another opportunity to take. Euro USD is, in my opinion, exhibiting some very nice volatility signal. You've got the volatility actually increasing. That's nice if you want to short your USD, but I need to see some retest of some levels. I need to see some levels break down. When they start to break down, I'm going to take the trade again. So same as always, playing the level break, putting a stop right above the entry, and I hope to catch this magnificent trade. I really think this one is gonna be a good one. I hope I'm not early, but yeah. So I'm expecting DXY volatility actually to go down, DXY to be to have bottom, and your USD actually to have topped, and volatility of your USD to start to continue to pick up to the upside. Now VIX, so VIX went to the target I had. It was another target provided by Vi. The cycle up has started. Here you can see in green, and it's pretty simple. I'm looking to buy the dip anytime we arrive at, I'm gonna give you the coordinates. So 142. for for matrix value. So that's the green here. I will be looking at where the market is when we get to this. Again, it's confirming the fact that just be patient. This week, definitely not a week to buy. Next week, probably another week not to buy, and the week after next week. That is confirming the matrix on VIX is confirming this kind of calendar. My expectation again, VIX goes to in the high 20s, and then they smash this thing down. So meaning we have a very nice buying opportunities, and then we keep we start again to rally. So base case again. So oil, I've seen some macro account playing the bounce in oil because inflation is back. So far, all I'm seeing is another rejection of trend. So that's number 3 since April. And you can see volatility here, definitely not exhibiting the pattern you want to see for a bullish asset. Doesn't mean that in 2 weeks the picture is going to look different, but yeah, for now I don't see it. You could have tried to buy the dip here, but yeah, I would be playing oil when I see trade actually cross trend. That's the best place to do it, the best way to do it. So gold, I haven't changed my opinion regarding this one. Volatility is still increasing. We got a nice retest of the low of the MFR trend, which held. I think it was also one of the quarterly level from Vai, and I saw it was touching that and holding. I thought, okay, nice, but I'm still not buying it. Volatility is still increasing until I see, so trade of vol, so that's a black line, get back below trend, until I see volatility to calm down. There is no reason for me to buy it. So let's say we don't have a sell-off. This is the kind of pattern you would be looking for here, the one we had at the beginning of January 25. Maybe that's what's coming. But for now, I'm not interested. Volatility is too high. I think you get chopped taking this position. Now, Bitcoin. So I've been taking profits and adding anytime we hit one of Vai's levels. It's been working pretty nice. My ultimate target is right above 112K. Today we hit 112 but couldn't break it. I started to unload some today, but I'm looking for the break of this particular level to really start selling. I'm actually interested to see what's going to happen if we get to 115 to 117 levels. I've seen Vice level again, and it seems to be how to say, a place with a lot of resistance there. You also have the MFR range in this area that are starting to tighten, so long term and short term. So yeah, looking for the break to unload and maybe keep some to see what's going to happen to 115, 117. Now, another good catch we had 2 weeks ago was the switch of trend on yields. So far, we've seen the confirmation of it. And you can see here volatility is going down. Trade and trend definitely expressing the bearishness of the volatility of the asset. So bearishness of US 10-year, bearishness of US 30-year volatility. So meaning the bullishness of these assets and the bearishness of bonds. So, I mean, it's beautiful to watch when this happens. So, I mean, if you play the short bonds based on that signal, very nice catch. We still have room for trade to go down, but we are really approaching the mean levels for those. So maybe a bottom in bonds incoming soon. Not sure. I know Vai was mentioning a very important level on the monthly, but I'm not going to take it. Something important also regarding so stocks, I'm getting a lot of sell signals. So it's confirming, in my opinion, the fact that, I mean, definitely risk reward is not there. If you missed it, you missed it. And an opportunity is coming, in my opinion, again, in maybe 2 or 3 weeks. And then we can load the bot there. But you can see here a lot of sell. Okay, so this one, but yeah, Microsoft, same. Which one we got? Yeah, Apple is just hitting his pants. But yeah, you can see Matrix also reversing on many of them. So, I mean, I don't see it. I mean, the bounce was from where we signaled it to the yearly open, and now no need to take risk. Just wait for it. It's gonna come. I think this year will be very bullish. Will continue to be very bullish. Just wait for it. So yeah, that's my take. I think I've covered everything I wanted to cover. If you have any questions, please feel free to ask.
Thanks, Raphael. Great insights as always. When it comes to gold, actually today we rejected the pivot of a previous contract. I showed multiple times how to find those levels, but 33, 32 is very important in gold. And the market was up above that, and now it's significantly below. So yeah, gold can get some trouble. I will touch on that and give more levels soon. Okay, let me share the screen. Okay, so first of all, as always, no surprise, we will start from the most important thing, usually underlooked, but literally the most important thing, which is, of course, correlations. And we will start from stock bond correlations as almost always, because that's the thing that I'm that I'm watching very closely. And if you remember 2 weeks ago, short-term correlations were negative, and longer-term, you can call it mid-term correlations, were going down, still positive, but going down. Now we see a little bit different scenario, which can also give us some concerns about the overall state of the market. Actually, today was a very important day for bonds, and maybe at least for a while, bonds will be saved, but we'll see. I will touch on that later. Now, correlations. They are starting from 10-day stock bond correlations. They are positive. They are very weak, but they were very negative. They were literally minus 0.6, and now we are plus 0.15. So watch that, be aware. And of course, this will give you a clue about the actual state. And 21 days, still positive, but going down. So that's good. Basically, no changes from 2 weeks ago. We still see these signals that stock bond correlation tends to go down. And yeah, so be warned, because short-term correlations going up can, of course, change situation in other time frames as well. But basically, this is a very important regime indicator, and if we go to very long periods, you will see that regime is actually still quite volatile. Now correlations are low, but they went up quite a lot because of this recent rock and roll move in April in the markets. So no surprise, but just be aware that if you see stock bond correlations going up and going up significantly, and for a long, long time, we will get even more troubles especially in the equities markets than we have now. And actually, I think that now we will get some volatility and roller coaster in the equities as well. Overall, average sector correlation and dispersion that I tweeted about is even though going up, but still you can't compare it to extreme values that we had, of course, in April. But the dispersion index yesterday actually went up. Today it was quite calm, but that's one thing that I'm always looking at from CBOE, ticker is DSPX. I find it very valuable, but I calculate my own correlations and dispersions also using my own ways. So average sector correlations, if we are looking at short term, we are at 0.7. These can go up way higher. For now, no trouble there. But if we take a look at the longer term period, a little bit longer term period, you will see that, of course, after April's collapse, all these correlations went down significantly. So that's just another confirmation that basically now not all sectors are crowded to the long side or to the downside. Basically, single names and single sectors are not over correlated. So that's the one thing that can be quite good. Now, I promised that I'll explain what I see in bonds, and I think that bonds are very important right now. And if you saw my tweet today, of course, we had first of all, a couple of days ago, we had a monthly base case target reached, but I was not very happy about how it was reached because the actual target was reached during the pre-market and not during the regular trading hours. So I, of course, tweeted, yeah, right. Because, yeah, we had this bounce. If we include, I'll show you what I mean. If we include extended trading hours, you will see that basically on Monday the target was reached during the pre-market, but then if you see just a regular trading hours, you would not see that. So that's why I thought, okay, that was the bad low, and I call the bad not tradable low. Basically, if the low or high was made not during regular trading hour session, because it's definitely not a good low. And yeah, and then of course bonds continued to go lower, and today we reached the even more important target, which is the quarterly targets, orange line, and of course there is a hierarchy to the levels and importance of the levels, and of course yearly is more significant than quarterly, and quarterly than monthly, and so on. But here are the targets, and today we had this matchup, which was very important because I was eyeing ZB, and actually the scariest part was this 110.19 level, which is the low from January, and it looked like if bond markets close below that, we will soon see levels that we have not seen since 2023, and yeah, that would be very, very bad for economy, and it would, of course, drag the markets by a lot. So we will see. It's a very important level. I made no trades, but because yeah, this action in bonds was crazy. But basically, the fact that today very important areas held in both on TLT and ZB makes me want to see what happens tomorrow, and if we see or next week, I should say, because not tomorrow. But if we see a couple more of green days, it will be way easier to breathe for the markets. Let's call it like that. For those who know how interest rate futures are voted, what these actual numbers mean, I will say that one important thing in ZB to watch is 112.15, because 112.15 would represent 5% yield on the 30 year. So just keep that in mind. That this level would be very, very important. But this is what is happening with bonds. So yeah, one thing that below these levels we will see prices way lower and yields way higher. So be aware of that. If you bought the dip, or if you're planning to buy the dip in things like TLT or so on, just or related, just watch those levels, because 83.35, if that gets taken out, you will get some more downside, and actually significant downside, uh, really significant downside. Yes. Okay, let's move to yes. I'll try to cover as many symbols as we had. So basically, what happened, as Raphael said, ES reclaimed its yearly open of 59.49, which is a most important price for the 2025. NQ did it way before, so that was exactly what I expected, for one reason, that when NQ did that, there was no rejection. NQ just reclaimed and continued. So, of course, the expectation was that ES will do the same. And as always, the breakouts and momentum, another expectation was that after the breakout of the yearly open in ES, we should see acceleration in buying, and we should see some new momentum, which of course didn't happen, and the market stalled, and now we see what we see, which basically it spent a couple of days there, tried to break, but it was unsuccessful. It reached the quarterly base case target, and for now we see this direction down. And I tweeted, because first of all, now you should know all these prices, because they don't change, but the most important price to the downside was 58.40, 58.40, which was the December quarterly pivot in the ES futures. And yesterday, when this quote unquote small crash happened, the market went to 47, I believe. And today, before the open of regular trading hours, market went below that level. Today tried to bounce, but I see no momentum, and especially market on close, the last 10 minutes, where we saw this almost 20-point drop in the US, is not in the ES, sorry, is not giving me a lot of conviction to be bullish. So I expect that 58.40 to break, and after 58.40 we will get 58 even, 57.70, and 57.20. I will update, of course, in real time on Twitter when that happens, but that's what I would expect. I don't. It's hard for me to expect now very strong momentum to the upside in the upcoming trading days. But of course, as always, we will see what happens. So now let's see the gold, because about gold, I have the opinion which is maybe a little bit different from Raphael. Gold has been quite a good trade, and is respecting levels very well. Same with oil currently. So I'm watching 33, 32 level, and 33, 32 level is just the price where the previous gold contract final settlement was, which is a very important price for the market and will always remain a very important price of market. So close above that, if we see a close above that during next trading days, I can even see new all-time highs coming. So I can say that I'm really bearish on gold, but of course we need to be reactive. We can't try to predict the markets, and if we really see what's going on and how gold moves, it's actually very orderly now. And what I would expect, literally, if we retake 33, 32, then we will go to 33.93, then we 34.87. We have some targets in the middle. I will touch on targets in a minute or so, but watch that, because of course, if downside pressure continues, we will see prices that are significantly lower on gold, or at least some chops. So basically, for me, the dividing line now is 33, 32, and it's a closing price. So I don't think that I would try to chop myself intraday, but if I see a close above that, that would be pretty bullish for gold to me. When we talk about targets for the futures, basically we are literally at the monthly pivot. This pivot is not from the settlement, but just the first print of the month. I'll adjust my chart for futures. It's quite important. Yeah, so basically, since the beginning of the month, not much happened when you look at it this way, because basically gold is at the same price where we opened. But of course, it's way higher than the quarterly pivot, and it reached quarterly targets actually a couple of times. So basically, that's another price for you to have in mind, that if we get some upside momentum, 34.26 is quite an important price, at least for me. So this is gold. So not a lot of conviction. Basically, we failed at very important price. Monthly pivot is basically here. So market is not doing anything when it comes. I mean, gold is not really doing anything. So we'll see. But I'm not too bearish about that. I still think that when it comes to gold, first of all, from level to level, but second of all, we will see a massive down move in gold if we get some margin calls in the markets, which of course I can be wrong, and I'm not an expert in these, but that's what I think. I still think that gold is a nice trade. It was a nice trade, and I'm not trying to call big, huge drops in gold, even though we had some volatility. So keep that in mind. Market went to quarterly pivot. Now it bounced. Tried to go above monthly pivot, but now it's below monthly pivot again. So yeah. 31.57 is quite important price to the downside, and then we can have for 30.29 also. It's an important price. Yeah, so let's talk about the bag 7, because Raphael mentioned, and he was very right when he said, yeah, that basically a lot of these big tech companies basically reached their targets, in some cases even the second targets, and stopped there and went below. So now we can see some weakness in that. But of course, keep in mind correlations, because at the end of the day, most of the equities, apart from maybe Tesla, will have trouble going up if, for example, S&P is going down, which is, of course, It's just how it is. And yeah, so always have correlations open and see what's happening. We have real-time indicators on TradingView. I can't stress enough how it is important. Yeah, but let's start. So NVIDIA. NVIDIA is basically above the base case target, but it got stuck on the quarterly target, and quarterly target 133 is here. But monthly target for the month of May, if we see some continuation in the upside, the bull case scenario would be 141. But now, like I said, I give more weight to the quarterly levels. In that case, when I see those in between of upper levels, so we'll see how it goes. But basically, market reached the quarterly target, and for the last couple of days, not much happened here. So this is NVIDIA, and of course, it says that on Wednesday we have earnings. So keep that in mind. Microsoft is very strong. It actually reached bull targets not only for this month but for the quarter, and yeah, basically stopped. So same situation. It's I believe I mentioned last time, or I was talking about Meta, but I believe I was talking about both. That these looked the strongest, and basically that's what happened. So it took out all the targets that we can see for the quarter, and took out the base case scenario for this month. If we see upward momentum, the final target would be 482 for this month, but the overall picture of the markets, I actually don't expect that. So we will see, because everything is interconnected, and I always give a lot of weight for signals coming from ES or SPY for individual names as well. So when I see some interesting prices, some interesting targets or levels for individual stocks, I always measure first of all correlation to SPY, and second of all, I want to see if SPY has some room to go, because if SPY looks weak or is at important upside targets, yeah, for some sometimes single name trades can get into some trouble as well, because everything isn't connected. Apple, this one is of course weak, very weak. So Apple is below quarterly pivot, no surprise, and below monthly pivot, also no surprise, and basically at the base case quarterly target of 199. So for Apple, it's not a good trade, especially here. What I see, even if we get a bounce from the quarterly target of 199 again, it will see some trouble at 209. And if that quarterly target is broken, you can see prices that are way lower. So Apple, no trade. I see nothing interesting here. Weak stock, very weak stock. Now another stock that I actually own and sold some more. This one, basically, it's May 22nd, and it did all the expected base case scenarios to both sides, literally. What we had basically from the monthly open, when the month opened, it of course there was news, and it went exactly to the target, and now it's today it broke the target to the upside, and then closed at the low of the day, actually, which closing at the low of the day is hard to interpret it as bullish. So yeah, basically, I sold some more at the target, but keep that in mind. That basically Google, when it comes to base case scenarios, it did what it had to do, expected moves to both sides. So yeah, and Yeah, so all the targets are pinned, so don't ignore these levels. I believe in the pinned tweet it's Google with L, but it doesn't matter. Price is different slightly, but the movements are exactly the same. So yeah, Tesla. Yeah, so Raph's baby, and for me, I will maybe give my 2 cents about how I view trading in general. I will repeat some things, but I will try to be short. I don't want to make another 10-minute rant about the exactly same thing. But basically, Raphael tweeted a couple of days that if it goes back to 327 level or something, I will buy the dip, which is fine. 327 level is quite important level, but it's a very risky way to trade, and that's why I always mention breakouts, not bounces, not mean reversion, not something. Uh, First, what I want to see is when the price reaches some level. So let's say there is a retracement. Price goes down to some level. In my case, maybe I'm looking 320, but it can be 327 because, like I said, 327 is important price, very important price. And after that, we have other prices and levels and targets. But let's say, example, 320. I first need to see it reacting to that level, and I need to see the move up. Of course, you don't want to miss the trade to be late on a trade or whatever, but it will be a cheap trade because your stop is very close, but you want to see it respecting that level. So that even better if it goes slightly below and then comes back, and then comes back. So then you get a breakout because I only think of breakouts as a respectable signal, not some bounces or mean reversions. But at least you need to see a reaction. So don't buy just because it reaches a level. But yeah, 327 is important, 320 is important, and the bullish target for the month is 360.6. I believe I saw a comment on one of my tweets. What's next after 361, which is this level, yeah. So next, if that level is taken out to the upside, next would be 375 or 375. So yeah, just keep that in mind. If you really want to know what's coming next, you see some levels. But I just want to show the yearly situation and of course just for a perspective because some people maybe forget about it when we see these rallies, mountains, and so on. But basically, Tesla would need to go to 390 just to be flat on the year. So just keep that in mind. Which of course. So that would be also very important price yearly pivot. So 390 would be the same as we talk a lot about 59.49 in the years, same importance, very same, absolutely the same importance. So Meta monthly targets were actually again same scenario. It reached base case target, tried to break, but now is below. So yeah, keep that in mind. The next target is in a pin tweet is 705, but basically now if the price struggles, you can easily come back to monthly pivot or and actually the exact high of it was quartered. I'm just showing you what's coming with my bi-weekly meetings and newsletter and overall analysis that we will launch soon in a couple of months. So yeah, of course, I'm showing quarterly targets, but on Twitter only monthly ones are available. But I just want to give you a taste of what's coming and how we will approach everything. Meta, yeah, Meta. For me to be bullish Meta, it first needs to go above 649, and then even better to make a new swing high. So new high from here. That's the thing. Okay, we have a couple more left. Yeah, so Netflix. Netflix looks. Of course, the expected moves are very big for Netflix. So now we'll see how it goes. But what we have on a quarterly basis, yeah. So we are above actually the bull target on the quarterly basis. If upside move continues, you can see what can be expected. But yeah, and if we reclaim this quarterly price to the downside, then watch the pivot 1122. Yeah, but Netflix looks good. If you bought it below, just make sure to keep your stops at least at break even, or yeah, so don't let your trades to end up losing ones. But other than that, it's nice. It's nice. Yeah. So USD JPY. This one is literally went to the base target and then went back to monthly pivot, and actually today it bounced off that pivot. So we'll see. For me, it's a sign that maybe dollar has some chance to go to the upside from now, but of course, you know that below this level we will have these targets. So yeah, and on the quarterly basis, also this target is very close. So this base case downside target is very close. Now market is slightly above. So yeah, this what you can expect. Just be careful. From my perspective, I like places like this because, like I said, it gives me quite cheap trades with defined stops that are not only defined, but of course very small. So yeah, but for now, yeah, just this observation that USD JPY is at the interesting spot, and yeah. Yeah, so Bitcoin and Bitcoin, I need to talk a bit more about that. Final target, which has no specific time frame, so it's not necessarily this month or this quarter or something, but final target of the move that Bitcoin wants to do is 144,000. And of course, I know that it's quite far away, and yeah, but I just wanted to mention that at 144,000, actually 144.5 ish, but at 144,000, there will be. If we reach that, it will be a spot where I will flatten and then watch. But basically, I will have no positions in Bitcoin at all. But of course, it's not going to happen in a straight line, and it's most likely not going to happen even fast. But I wanted to mention it here. I don't want to do that on Twitter because I know that it will cause some discussions. But this is the target, the final target. So not like monthly or whatever, but final target of this move, 144,000. You can mark this level. That level would be key, would be very important. Yeah, so now, of course, we had a very important target of 112,000. For Raphael, I'm not sure. With Bitcoin, there is one problem that it trades on a lot of different exchanges and so on, and prices differ a little. So I don't know. At least for me, it reached that target. Raphael said that for him, it's not, but with Bitcoin, like I said, I either watch Coinbase or spot or Coinbase perpetual futures, which with perpetual futures prices don't differ much anyway. But I watch data on Coinbase, and if other person is looking Binance or some other or Yeah, because there are plenty of them, so these prices can differ. But yeah, doesn't matter. Today it reached, or in Raphael's case, it almost reached very important level, and now we see the rejection. But when it comes to monthly targets, Bitcoin is still in the middle of the two, so base case and bull case. And if we see another leg up to Bitcoin, yeah, so 115, 600, I believe on spot on Coinbase, it's like 115, 7. Yeah, so that's a good example of what I mean with Bitcoin. That I mean, now if you open Binance chart, for example, it will be also slightly different. So with Bitcoin, be aware of that. And whenever I tweet something about Bitcoin, at least I'm looking at Coinbase. Not that it matters, but I think that's important to say. Yeah, but if we see another upward momentum in Bitcoin, we will see 115 and a half. Let's round it up because with Bitcoin, that's the best thing to do. So 115 and a half, when 121 is important above that, and then 125 area. So yeah, and on the downside, this is what we have. So yeah, we have this matchup, which is a very powerful level for me, powerful signal. It means that basically quarterly and monthly targets are very close one to another. So I give it even more weight. But yeah, I have 121 above that, and then 125, 126, and 127. So yeah, Visa and watch pivots, yearly open. So watch the prices on where you trade Bitcoin. So not necessarily on Coinbase. Where your trading, crypto trading is, use that data, not some other data, because with Bitcoin that data will differ slightly. But yeah, watch where monthly open is, quarterly open is, yearly open is, and yeah, if it goes below those, you can trim some position on the law to reduce potential losses. And when targets are reached on the upside, sell some to take some money off the table. But yeah, so this is when it comes to targets and what we can expect from the markets and how markets are trading so far, which like I said, a lot of stocks reached their targets and retraced, and also ES is at very important levels. Same with bonds. So now we are at the crucial moment in the markets, and one way or the other, but you can expect some important and hopefully exciting moves. Of course, these moves will be exciting for those who are on the right side of the move. But yeah, I expect now quite important changes in how the market goes because of all this stock bond thing. Yeah, and Hearst exponents, I really wanted to touch a little bit on that, and also to give insight about the ranges. So first of all, and very good point from Raphael, Hearst exponents are pretty high. So keep that in mind, both shorter term and longer term. So keep in mind that if we get some significant downside action or upside action in stocks, that can lead to quite explosive moves. So watch that. Now, when it comes to ranges and how to use MFR with targets, because when I started tweeting that as an introduction of what's coming, and after we did spaces about what's coming, of course, very logical question came. So how to use all these things about MFR. Is it with MFR what's already available? Is it a replacement for ranges and questions like that? Which, of course, no. It will always be about the range, and when it comes to risk profile, ranges will be key here. But the quick example of how I use it with the ranges is basically you check upside downside ratios on the range. So first of all, you need to have an asset you are interested in. So let's say in this case on the long side, and you monitor correlation till you monitor trend and ranges, and you see, okay, maybe upside downside ratios support that. Everything looks nice. Maybe you see the cap on the downside, which for me is number one thing when it comes to signals that are coming from ranges. So let's say cap on the downside, then you will be able to see where are the targets and levels for the stock, just to see that you are not executing in the middle of nowhere, because ranges in the first place are risk profile, not some trading signal or something. It's a risk profile where risk is skewed. Is it to the upside? Is it to the downside? Is it in the middle? And so on. Of course, in the calm environments, when markets are grinding slowly and volatility is low and so on, I know that people are buying from low end of the range and selling at the high end and so on, but that was not why I created this model and in the first place. So at least now, if you want to buy something, and maybe, which is not encouraging, but maybe even if it's bearish trend, but you really want to buy it and you see it at the downside of the range, at least they will know that you are not executing in the middle. But of course, there will be plenty of more content, and online meetings are coming, and yeah, I will do everything for users to understand very well what it is and how to use it. But yeah, these levels and prices are very important. The market is always reacting to those, I'm sure. If you wrote those down or made screenshots and marked on a chart on May 1st, then I pinned those. I'm sure you noticed that. Yeah, so that's it from me. Actually, I expect quite a lot in the next 2 weeks. We'll see, of course, what we get. But yeah, we are at crucial spots in bonds, in equities, in single names, in indices, even in things like gold and oil. So yeah, we'll see. I think that's it for me.
Thanks, Vai. Thank you for going in depth with the Max 7. So,
Oh yeah, bag 7 is important.
Yeah.
It's very important.
I like the play of words. Very good.
Yeah.
So let's see, regarding questions, I saw one. Uh, did I miss it? What are the expectations for volatility? Yeah, you missed it, bro. Just you're gonna rewatch when it's posted.
Yeah, Raphael talked about volatility a lot, so there will be a recording. I hope it helps.
Yeah. And yeah, nothing else I see. Should be okay. But again, yeah, to sum it up, I mean, I'm expecting chop or maybe some kind of sell-off. And I don't want big levels to break. If big levels break, then
When it comes to me, I always want them to break because
yeah.
it will give us momentum.
Yeah, you want volatility,
But
of
yeah,
course.
of course, I understand. But yeah, I don't know if I expect chop, but yeah, it's also highly probable because if the market gets stuck at an important level, that's why I always say I want to break, because that's actually what you said. If market will not break, both 59.40 and 9 and 58.40 are very important levels. I'm just talking about years, but it applies to any. Uh, Market can stay there for a long time if market can't break. So yeah, and as traders and active portfolios, we still need some movement, because if market decides to stay at the same levels for a couple of weeks, it will not be as exciting. But yeah, like I said, we are at very important spots in the market, so we need to watch and to be careful, of course, from level to level.
Exactly. So that was the only question. Can't wait for you to post the new levels, new targets on June 1st.
Oh, it will happen, but we still have what, 1 week?
Yeah, it's
So
getting close.
yeah.
So yeah, I mean that's it. We can wrap it up, I think.
Yeah, so I hope it was useful. Thanks, Raf, for your insights as always. Yeah, and thanks everyone for watching. I hope it's interesting and useful. And yeah, as always, manage your risk and see you hopefully in 2 weeks. Bye, everyone.
Bye guys. Bye bye.
Bye.